really start on silver, I want to note energy, because energy is the most important commodity. I consider oil to be the engine of the economic activity, bar none. And we're all griping about the price of gasoline, the price of oil, roughly $100 a barrel. I'll use a round number. But in a barrel of oil is 25,000 man hours. And 25,000 man hours at $20 an hour labor cost would be $500,000. So is the price of oil worth 100 or is it worth 500,000? I'm saying this to get you to think, because if we price human labor in terms of oil, then no one in India or China would work for 1/3 of a penny per hour. So there is this huge boom that's happened during what will be called later the age of oil. And we are at the energy cliff, which means the substitution factor is critical, and we're not going to do it with wind, and we're not going to do it with solar. So we are facing an energy crunch in the next few years, which spills over into food, politics, social class, everything else. So now I'll focus on silver. I just had to get that off my chest. So just to put some context of silver, silver is two markets. It's an industrial commodity and it's money. Many will argue now that it's not money, but I'll refresh everyone's memory that all the Romance languages, the word silver and the word money is synonymous. It means exactly the same thing. So if I were to go to Argentina and said, give me some money, I'll be saying, I'm asking for silver. So I told someone in Argentina or Colombia or Mexico that silver isn't money, it would make no sense. They'd be saying money isn't money or silver isn't silver. They wouldn't understand what I was even talking about. So this chart goes when silver was nothing but money up until 1873. And you can see that the price of silver in constant dollars, and these are $1998 as the chart says, was roughly $200 an ounce. And the all-time high was, I think, around 700. And then we had years of a price around 100, then 70, and then as we decayed in the use of silver as money, it dropped down. The bottom point down there is when Warren Buffett bought 129.7 million ounces of silver. Buffett is a value investor. Buffett doesn't like to buy anything that doesn't have a yield. When he bought 130 million ounces of silver, they were only able to deliver 90 million ounces. The remaining 40 million ounces he leased back to them, and is getting outrageous lease fees until that was paid off. Once it was all paid off, the 130 million ounces went to London. And believe it or not, the SLV, the primary silver ETF, came out of London under JPM's management, and it started with 130 million ounces of silver. Silver is the only metal that is below its 1980 high. So I won't read them all to you, but copper's up 200%. You look at rhodium, well, I won't, rhodium's an exotic. Nickel, 200%. Iron, almost 700%. And here's silver. Something isn't right. Now, silver does outperform gold in the bull markets. Now, I can cherry pick these numbers. Everybody does. Those are the numbers from the dates I chose, but it usually does outperform in a bull market. The performance of silver is erratic, more so than some commodities. So I coined the term, it'll scare you out or wear you out. It'll be boring and just go sideways, 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 be in a big trading channel. I'm so sick of silver. It's only gone between 20 and 22 for a year and a half. I'm done. I don't want it anymore. And then all of a sudden it'll shoot up. It's just the way the market is. It's got its own habits, but it does spike high. And that's when you want to sell in paper terms or swap into gold or pay off your debt or get into real estate or buy stocks back or whatever. If you're overweighted silver or gold, and at this point in time, I believe you absolutely must be, but that's my opinion. You don't want to get married to it. All things ebb and flow. Silver is very undervalued. Gold is undervalued. The mining shares are dirt cheap for the most part, and we have a long ways to go. Silver demand, this is important for the silver aficionados, which I'm sure there's a couple that would be listening to me. If you go back to the year 2000, and I showed you this pie chart, the industrial usage would be 35%. It's now over half. But in the time of the year 2000 to 2022, the production of silver has gone from 550 million ounces to 1 billion ounces, roughly double. So think about it. We've gone and increased the silver supply from mining and recycling almost double in 20 years. And during that same time frame, the industrial usage has increased from 35% to 55%. See a trend here? Almost get tired of saying it. We all know we've got a debt problem. The world has a debt problem. The world's economies, our financial systems are based on the US dollar for the most part. And we have hell to pay at some point. We're starting to pay it as I speak. Real yields. This is what's important. There's this big argument that as soon as the Fed raises interest rates, it's going to quash the gold market. Not true. The only way that the Fed can quash the gold market using interest rates is to put it at a real rate of return. And if the real inflation rate is 7%, then the Fed would have to put the bond at 8% in order to give a 1% real yield to bond investors. But that's not how the system works anymore. The way the system works now is everybody's geared up, so 1 penny equals the strength of 10 cents, and you get these 0.002 moves, 0.02 basis points, and since you're leveraged so hard, you're going to make make or break money, what I call, currency, day in and day out. So it's a big gambling casino. I mean, there's nothing in the system now that isn't over leveraged, over margined, and mispriced. It's the way it is. And there is a day, and it's not too far away in my estimation, where we're going to see some real changes in the system. So I could go on and on this. I will spend just a minute or so. As an Austrian, I have to say, Austrian economist, that's philosophy, that inflation is an increase in the money supply. That's kind of put in stone. It's carved in there. Okay, I accept that definition, but just because we have an increase in the money supply doesn't mean we get inflation on our tables, at our gas stations, in our shopping arenas, at the sports stadium. It depends, because so much of the money that's printed goes right back to the bank. The money's printed, it goes to the money center banks. They've got excess capital, so they put that cash back into the system by buying a note or a bond or a treasury bill, and they lock it up for 5, 10, 2 years. So it's as if it doesn't exist. It's as if I gave you $5 million and you said, oh, I'm so happy I can retire, I can pay off the school loans, I can buy 2 new cars, but you don't. You open up your safe, you stick the $5 million in the safe, and you lock it. So it has done nothing. I've created it or I've given it, but it's doing nothing. That's a metaphor for what's going on, generally speaking. It's a very broad brush. There's a lot more to it. I'm giving you the idea. So it's the velocity of money. It's when you take that $5 million out, you use it as collateral, you buy a couple of houses, you mortgage them, you leverage up, you make that $5 million work about for $15 million, because the banks will do that for you, and you're scaling a spending spree. Now you're spending money. Now the current is flowing. And when that happens, then you're going to see inflation. And that's what we're seeing. We're seeing as this chart shows, we're very low on money velocity, just sitting there in the safe, not doing anything, but it's starting to now. And I am convinced with all my work The more I look at psychology of money and the psychology of markets, the better equipped I am to have more authority. Not that I'm an authority, but it's certainly my passion. And inflation, I'm convinced now, is more of a phenomenon mentally. It's when people say, gasoline's going to cost me more 2 months from now, I'm going to fill up my 5-gallon cans. Food's going to cost me more 3 months from now, I'm going to buy a case of tuna fish. It's that kind of mentality. Once you get that mindset through the population, it's almost impossible to turn it off. You could have true deflation, you could taper, you can quantitative tightening, you can do all those things, which will make the problem could make it worse. There's no way out of this thing. But the psychology doesn't get changed easily. So the facts can change, but the psychology. So the reason we've gone so long and so far is the belief system. People have believed that it's okay and a little inflation's all right and the Fed's got it under control. And, there's this guy, Raul Paul, that does he's got a great platform called Real Vision. And he did it on the stream of consciousness thing. And he went in and he said, I don't see any inflation. There's no, come on, man, you're a fund manager at one time. You got to know. But obviously, he probably wishes he hadn't made that statement. But inflation's here, it's coming back, and it's going to increase. So, gold gets a bad rap. But over the last 20 years, if you look at it versus the S&P, it's beat it. Even silver's beat it from the year 2000. And anyone in here that studies finance at even a minute level knows that almost every fund manager out there can't beat the S&P. So if you pay somebody to manage your money, they're best off by buying the S&P ETF and letting it ride rather than be a premier stock picker. Now, there are exceptions to that, but most can't beat the market. So there you have it. There's your S&P 500 versus gold and silver, and you never hear that. You never, ever hear that on CNBC, MSNBC, any financial channel. They'll mention the gold price. They might mention the silver price. They might talk about mining once in a blue moon, but they will never tell you that gold has outperformed the S&P for the last 20 years. So I already did the velocity. This is an important chart. I threw this in here so I wouldn't forget to talk about it. I'm not a big Elliott wave guy. I've done a lot in the technical world, technical analysis. I do believe in it as a tool. I don't hang my hat on it. It is useful to me, but it's, again, just an arrow in the quiver. It's not everything. So there's basically 3 legs up and 2 legs down in major secular markets. So silver's had a move up and a move down, a move up and a move down. And some of you, I'm sure, have heard me lecture before, and I've talked about 90% of the move in the last 10% of the time. That's the third wave. The third wave is the longest in appreciation. So going from $10 to $100, but usually the shortest in time. So it's that wild ride. It's when Intel only went up. I remember when the tech started and Intel, and one of the primary financial channels talking about, God, does that stock ever go down? It goes up every day. And it pretty much did. And it was on a parabola like this chart shows, and it just keeps going. This is what will happen to the gold and silver markets and the mining shares as well. I don't know when. It's sooner than later. And there will be a shift like this panel that preceded me talked about, where people will go, as Mr. Putin said recently, to food, real estate, and gold. They'll go to hard assets because that's something you can touch. You know it has its wealth. You know it has value. So get ready, strap in your seatbelt. You're going to see what I think will be one of the most significant moves on this third leg that you've probably ever seen. Could I be wrong? Sure, I could, but it's doubtful. So let's look at silver a little deeply. And this is a chart, I think it's from Metals, Silver Institute and BMO, showing the silver deficits projection. Now, yes, it goes out to 2030, and that's only 8 years away, and you can see the trend. The deficit continues to grow more and more and more. Deficit doesn't mean shortage. Deficit means that the amount of mining and recycled silver doesn't meet the demand. And the way you meet the demand, since supply and demand have to meet every single time, it's arbitrated by price, which I'll argue isn't nearly true at times, but it eats above ground stockpiles. So when I was, flying around in my silver suit and kind of king for the day, and believe me, I never let it go to my head. I really did not. But when silver and gold were the premier assets to own for 10 years, it was a pretty sweet ride for me. I'll admit it. I spoke all over the world. I'm not touching anything. Anyway, we saw silver go in 1990 from 2 billion ounces above ground to 2006, losing 1.5 billion ounces. There was a continual deficit that averaged 100 million ounces every year for 15 years straight. So it was pretty easy for me to make a very strong case that we were on a trend that we were running out of silver, more or less. And this is all true, and we had this major market. Now, it bottomed in 2006, but the price of silver peaked in 2011. So there is a delay there. So what happened is from around 2000, there's no exact number, I'll say 2004, silver price had such good margins and the China boom and a lot of factors, but those are the two primary ones, is a lot of mining took place on a global basis. Iron ore, copper, lead, zinc, and silver, of course. And silver is a byproduct. 70% of the mining of silver is done on a byproduct basis. So the production rate went from that, I told you that 550 million ounces a year up to today's 1 billion ounces a year. So the above ground stocks have built from 2006 to present day. And they are sitting, depends who you talk to or what, since I've got a moniker of knowing a few things about silver, I'd put it probably at about 3 billion ounces. Now that's a good educated guess. But again, it doesn't really matter. It matters less what the above ground supply is, because if you're worried about the above ground supply, you never buy gold, because gold's above ground supply just adds and adds and adds and adds. It never has a real deficit. Above ground supply continues to grow, but it's got a unique property. It's perceived as money by everybody, not everyone, but it's perceived as money worldwide. Silver doesn't have that perception anymore. It used to, but still it is a store of value. It is, poor man's gold, etc. So it certainly does fall into that category, especially at times like now when we have some issues coming with the inflationary front and political problems and war and everything else. So this is just showing the mine supply. And I just talked about that, how it went from the 1990s, 2000s to present. And yeah, my numbers look pretty good. These are all in my head. This is from, I think, the Silver Institute. No, Incremerum. The Silver Institutes might be slightly different, but they all pretty much have to agree. They're facts. So what I'm trying to point out in that chart is the fact that the mining supply, mining, which is 850 million plus 150 million ounces of recycled silver, gives you the 1 billion I keep talking to. I can see this woman's thinking, wait a minute, David, you told me 1 billion and that thing says 850. So that's the mine supply. And then you add the recycling. So that's where you get your billion ounces every year. But it's been flat. That's the reason I put this chart up to talk to it. If you look from about, I'm going to pick a number about 2011, about the peak in price, and you draw a line in your head straight across to the right, you're going to see we really haven't gone above that for almost a decade. Solar, I don't really have to say much. It just continues to grow. We've gotten a fourfold increase, or 380, a very big increase, like 400% as far as efficiency is concerned. So what 1 ounce used to do in 1990, 1 ounce will do 4 times as well today. So we've what's called in the industry thrifted silver in solar applications. but you still have to have it. This one is one, it's a little complicated. I don't want you to really focus too much on how much is used for brazing or silverware or semiconductors or jewelry or any of that stuff. What I want you to note is the curve going from the left to the right in an upward fashion. So this is a combination of silver demand outside of monetary demand. So that's that 54% that's going to go. Remember I told you, think about it. The trend, 35% of the market to 55% of the market. The market went from 550 million ounces to 1 billion ounces. So we're increasing demand as the amount of silver mined increases. So there is the trend going up. And you're looking at how much available silver there is being mined. Now, this chart was done by my friend Matt Watson. That's not necessarily true. It could go up, but it's doubtful. I think this is accurate. And the reason I'm using a laser pointer is this is the high end, this is the low end. How do you fill that gap above ground silver? So the price goes up and you get a deficit again, where you have to eat up the above ground supply, but it's astronomically high. And what's true, when I wanted to bring this to your attention, is this chart goes to 2050. Well, according to the United States Geological Survey, we're out of silver in 10 years. Now I say that to say this, of course that's not true. But what they're really saying is economic silver is done. It's just too costly to get it out at $25 an ounce. It's going to have to be a hell of a lot higher price to get it out of the ground. And we're getting grades that are lower and lower. Basically, we haven't mined out the planet. There's still a lot left in Mexico, but we're using it like oil at such a huge rate that even big deposits will be eaten up quickly. Because we'll find a 1 billion ounce silver deposit. That would make the news. Even CNBC would talk about it. But that's 1 year's worth of silver. So my point is that this curve is going to go maybe up, maybe flat, and like that. It'll go down. And there's nothing that can be done about that because that's Mother Nature. That's how much silver is left. And the answer is there's not a lot left. So if you do the real math, and I haven't talked to Matt about this, but it's my lecture. I'm sorry about this, folks. So if you take that and curve it down, say like that, then look at the deficit. It'd be from there to there. I mean, it'd be unbelievable. That's the trend. Things change. We all know that, but I wanted to point that out. Gold-silver ratio bounces all over the place. I can talk to you privately about it. I do think it has merit. I do trade the ratio. I've made a lot more. Anyone that wants to buy gold at $1,000 an ounce, just buy silver right now. If you want $10,000 in gold, buy $5,000 in silver and wait. And when the ratio goes from 77, like it is now, down to 35, take your silver into your coin dealer, swap it for gold, and you just bought gold at half price, because the ratio will favor silver in the bull market. Silver's been flat in a wide channel for several months now, beating between roughly 22 and 28. That will continue until it doesn't. And I think it will break up this year. I'm looking at 33 as kind of the magic number. At that level, there's really no overhead resistance. Everybody that owns silver at 33 will be in profit. And the other thing that isn't pointed out too often, I was asked this, I did on my weekly perspective. I do a weekly perspective on my YouTube channel. Take about 10 minutes and I go over the whole economic system and who can do that in 15 minutes. But I hit the high points and I usually end talking about gold and silver. And this person asked me a question about silver on my Twitter feed. And I thought I'd do it on the weekly perspective. And I did. He said, I've held silver at 25. It's been 10 years. I'm tired. Did I make a mistake? What do you say? And I said, well, I don't think you made a mistake. Hopefully, if you bought the right amount, it's not going to hurt you. And that's in US dollars only. If you were in rupees, you were in Australian dollars, you were in Canadian dollars, you would be happy. In fact, the biggest deficit we had on the monetary side was in 2020. 530 million ounces of silver went into investment. Normally it's like 200 million is a big year. We were huge. We had more investment in 2020 than we had in industrial usage. That's a first. That's never happened in the silver market ever. And it happened. And the people asked, well, how could that happen? And the price, moved, but, and part of the reason is that India price of silver was Hunt Brother days. Silver in rupees is the highest it ever been in their lifetimes. And COVID had hit. And a lot of poor Indians especially saved in silver for a reason. You have savings for a reason. So they saw the highest price they've ever seen. The economy's shutting down. They've got savings. And what do? They exchange their silver for paper. The rupee. So a lot of that silver, I believe, and I'm pretty sure based on those facts I just gave you, was able to feed this huge demand that took place in 2020. But I call this currency game kind of the banker's last vestige of hope, because they pretend that one currency is worth more than another. And I can't say it's not, but in the bottom line, it's not, because they're all just based on belief. They're all based on confidence. Dow silver ratio, you can see the trend. We're going to be favoring the precious metals over the next decade, probably. Real estate, you could buy a medium priced home in the United States for 1,500 ounces of silver back in 1980. Now it's 10 times that amount, but the trend is clear. Will you be able to buy a $500,000 house or 1,500 ounces of silver? I won't say yes, but that is the trend. Current bull market, you can see we're really just getting started. Remember, my 90% of the move in the last 10% of the time, which means that if you did it last time, we went from $1.30 to $50, and most of that move came in the last year. Streaming companies outperform all the miners. That is what we specialize in the Morgan Report. If you really want to guarantee we're going to make money in the mining sector, we want to buy the royalty in the streaming companies. Gold share of assets worldwide, pathetically small, about 1%. So if it just doubled to 2%, think of where the gold price will be. And it's going to be more than 2% when the run of gold really gets going. So I'm around. You can ask for a business card. You can subscribe to the report for free. I got a free version, and I'll leave it there.
Thank you very much, David Morgan. Let's have a round of applause, please.